Hello and welcome to our first video edition of Options Arena for True Options Masters. I'm your host, Chris Cimorelli, and I've got our three options masters in the room with us today. We've got Mike Carr, CMT, CFTE, Chad Shoop, CMT, and Amber Hestla is joining us as well. If you read Options Arena and you vote for us every single week, you know the drill. We are going to take about 2 minutes each to share our idea on this week's topic, and you can also vote for who you think had the best analysis in the survey in the description box below. So the topic for this week is what happens next? Do we think the S&P 500 is going to rally 10%, or do we think it's going to fall 10%? Each of us are going to share our opinions with you today. And first, we're going to start with the venerable Mike Carr. And Mike is going to have 2 minutes to respond. And as soon as 2 minutes go up, I'm going to cut him off. So Mike, you ready to share your screen with us, buddy?
I am. Okay, so this is my chart, and it's not a very pretty one, but it's a breadth signal. So breadth is how many stocks are participating in the uptrend and how many are participating in the downtrend. And this looks at the MACD buy signals on all of the stocks in the S&P 500. So it's the percentage of stocks in the S&P 500 on a MACD buy, and we just moved above 30% this week. Now, the blue line here shows that 30% level. Signal's relatively rare. Last signal we got in March, actually a quick run up, 11% in 2 weeks, 12% in 3 months on that October signal. Last May, it signaled the start of the new bull market. This is an indicator that has a long track record, very successful, average trade 11.3%. So we're looking at the next 10% move, most likely higher. I think at that point, we resume the downtrend, but this breadth breakout, very bullish. Back to you, Chris.
Wow. Great job, Mike Carr. And you have still 50 seconds to spare. All right. Next up, we've got Chad Shoop, CMT. Chad, let's get your take.
All right, let me pull up my screen. That was a great chart though, Mike. Like that breadth indicator. Love always hearing the bullish stuff too. All right. So this is a chart, the S&P just showing the 10% levels that we're looking at, 10% to the upsides, roughly what, 45, 80, downsides, roughly 37.50. So that's what we're looking at after this little bounce that we've had. And Chris, if you or, Mike Merson kind of came up with this idea, if you came to me about this a couple of weeks ago after we'd been on a big slide, I would have 100% said to the upside. But now that we've already seen some of this pop, we see that I have the two kind of trends just highlighting here, red resistance level coming down, green support trending lower. That's S&P 500 is in a downward price trend. So I'm not going to fight the trend. I think the S&P 500 is going to head lower for its next 10% move. That doesn't mean that I still believe that it's going to move higher in the short term. I just don't think it's going to hit the 10% threshold. And part of my reason behind that is because, well, the ARK Innovation ETF, we're just looking at the moves on this one from the lows. It's already up about 20, 25% from the lows that it hit in May. So it's seeing a volatile run up. And this is the type of rallies that we see in bear markets, is these strong rallies. But for it to get back to its late March, early April highs, which is what we're talking about for the S&P 500, the ARK Innovation ETF would have to pop 100%. So it would have to jump, it would have to double from its lows in May. So not 100% from where it's at today, but from where it was at in May for the lows, a 100% rally. So I don't see that happening. I see it running up to this 50% level around there. That's the typical bear market rally. So we still have some more room to run, but overall, I don't think the S&P bucks this downtrend just yet.
All right, Chad, thanks for your take. Amber, you're up next. You've got 2 minutes. Let's go.
Okay, so I want to take a look at the SPY, the tradable ETF rather than the index. I have my indicator at the bottom of the chart. This is an indicator that I developed to duplicate the VIX index so that I could apply it to any stock. Now this indicator is unique. I was looking for an indicator that could help me generate income selling options. So as far as I know, there are no other indicators designed for that purpose. My indicator highlights times when volatility premium is elevated and declining, so we can capture extra income from the option. It does what it was designed to do, and in testing, I found that it was also a pretty good market timing tool. Remember, this indicator works like VIX, so high levels are associated with price declines. So that means it gives us buy signals when the indicator is declining. So I circled the most recent buy signal on SPY here. So to find the next 10% move, I projected 10% higher from the close on the day we got that buy signal, which is the blue arrow here, and that gives us 436.61. And then I looked at the chart to see, the chart pattern to see if it was reasonable to expect a move of that level. And it is. There is little resistance until we get that 10% rally. So the red box highlights resistance. The lower edge of the box is at 440. That could be a psychological resistance level because round numbers are often associated with resistance, especially on retracements after big moves. So more importantly, that's where sellers paused during the decline that began in January. So we can see that selling pressure eased in April with SPY hovering right near 440 for almost 2 weeks. When that level broke, the selling accelerated. So while SPY is moving in that narrow range in April, there were buyers who now have losses. Some are hoping for a chance to get out without a loss. They'll sell at break-even points. So that creates resistance at that level. I think the next 10% is up, but there is heavy resistance at the 10% level. And after that, I'm looking for a decline. But with that said, I do trade my indicators. So when it reverses, I'll take that signal.
And time. All right, great analysis from Amber. All right, we've got 2 bulls in the room and 1 bear, and I'm going to join on the side of the bulls this week. So let me show you what I'm seeing from my end. So this is a chart of SPY in TradingView, and you can see I've drawn my trend lines and some support lines for, I think, long-term where the market could go from here. So if we zoom in, we can see a very clear line of support down here, connecting intraday levels here in May, and then back in February and also January. And we can also see, this is very similar to what the chart that Chad shared. We can kind of see tops, descending tops right here. So it looks like we have a descending megaphone pattern. So I think this could be showing us where the tops and the bottoms are going to be as the market continues to descend. So as Chad showed, it could go either higher or lower from this point. I think it goes higher from here just due to how oversold it was and considering there was this double bottom on this trend line. So I think that the bulls are in favor over the next few weeks. But then after that, I do agree that I think we see another crash, and I imagine it will probably happen into end of July and probably early August right here. I've drawn a line of support connecting back to here. And this was the first major top after the COVID rally. And then after that, I think there's a good chance that we retest this double bottom back in late 2020 and even go a little bit lower as well. So from there, we'd see about a 33% crash to maybe a 40% crash into late this year, December 20 or November 2022. So we've got 3 bullish people in the room and 1 bear today, but make no mistake, we all think that we are in a bear market. With that said, feel free to vote for what you think was the best response today in the Survey Monkey in our description box. I'm Chris Cimorelli for True Options Masters, and we'll see you again next week.